Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 8th day of March, 2022. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. There are two ways to join the show each and every day. Number one, if you're out of your office, away from your desktop, you can always go to youtube.com/CFRN. Not only do we broadcast live each and every day on our YouTube channel, we archive each and every daily show. Currently, I believe over 19,000 daily shows archived for your educational and viewing pleasure. Now, the best way to join the show is by doing this one time. Just once. Go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone. Follow the instructions. You'll be registered in about 30 seconds, and that's going to give you one-click access to the show each and every day. The way it works, you get an email right before the show starts, and when you're ready to join the show, you simply click the link in that email, and it automatically logs you in. It also gives you access to the question box, so that you can ask questions and participate in the discussion. Instead of being on the outside looking in, you can be on the inside looking around. So however you choose to join us, we're just glad you do. And if you're joining via the YouTube channel, be sure, if you haven't already, hit that subscribe button and the little bell. This way, anytime we go live, not only for the daily live broadcast, but for any other purpose, you'll be notified. Okay? All right, let's open with a word of prayer. Our scriptures, Psalm 33:18 and 19. But the eyes of the Lord are on those who fear him, on those whose hope is in his unfailing love, to deliver them from death and keep them alive in famine. In these verses, famine refers to times when God's people literally lacked what they needed to survive. A situation that we have in this world right now. But we can also experience spiritual and emotional famine. When our hearts are parched because of our circumstances, in those difficult times, God is our only hope. And because of his unfailing love, we can keep our hope alive through our hardest days. Pray with me. Heavenly Father, we thank you for your blessings, for your mercy, and for your grace. But Lord, we're human, and sometimes we struggle to keep hope alive in our lives when circumstances appear hopeless. Forgive us for letting our faith wane because of what we see happening all around us. We know you are the answer when we need to be refilled with hope. The words of Psalm 32:22 are our prayer today. Let your steadfast love, O Lord, be upon us, even as we hope in you. You are our portion when we are spiritually, emotionally, or physically weary. We choose hope. And with that choice, we know your love surrounds us. Praise you, Lord, for your unfailing love in our lives. I know whatever difficulties I face, I can always count on this truth. And so can you, that God will never stop loving us, and that God will never leave us to face challenges alone. God, we thank you for the hope we have in eternal life because of you. In Jesus' name we pray. Amen. And amen. Well, I'm sure most of you, or some of you, heard President Biden speak today. Aside from the, well, he kind of seemed a little bit presidential. And so that part was really good. It really was. There'll be much discussion about the truths and truths and what's really true and all the drilling permits that are available. You know how long it takes to drill and then actually find oil? When there's this thing called the pipeline that you could just like turn on. It might not be as simple as turning on the faucet in your kitchen sink, but might be pretty close. Anyway, enough of that. Let me give you the numbers from around the world. The cash markets, or the indices as they're called, is where we'll start here in the U.S. The Dow up 175 points after the speech. NASDAQ up 57. S&P 500 up 11.5, make it 12. The Russell 2000 up 17 points. Our man in the street almost 1%. In the commodity basket, crude oil up $8.65, trading 127.90 last. That's a gain of over 7%. And if you were trading one futures contract, your margin on that would be 125%. But a $1 move in crude is worth $1,000 if you're trading futures per contract. That's an $8,500 per contract move. Gold up $78.70. Make that $80.40. Trading 2,076.30 last. That's a gain of 4%. Silver up $1.69. Trading 27.41 last. It's a gain of almost 7%. Now, as I said, when the price of crude moves $1, that has a value of $1,000 if you're trading futures, profit or loss, depending upon which side of the trade you're on. When silver moves $1 and you're trading futures, that has a value of $5,000 per contract. So let me say it again. Silver's up $1.70 today. Incredible. Absolutely incredible. Silver trading last 27.46. In the Asian markets at the close, the Nikkei posted a loss of 430 points, 1.75%. Shanghai fell 70 points, almost 2.5%. And the Hang Seng fell 291 points, almost 1.5%. European markets at the close, FTSE up 4 points, the DAX down 3 points, the CAC down 19. No movers, no shakers, so I'm pretty quiet trade there. And I know we don't talk about nickel prices very much, but nickel prices doubled to a record $100,000 a ton. In fact, trading has been suspended in London. Guess we need to see what all nickel is used for. It's not a commodity I've ever looked into. I have an interest in lithium as a commodity. I think there's great opportunity there. Nickel I'll have to look into. All right, so it was a red day in Asia. It was a mixed day in the UK. And while earlier it was pretty red here in the US of A, after the speech, I'm showing a big green radio Tuesday for the US of A. So with that, we can go to Michael and get a recap of everything that happened this morning in the live training room. After that, I'll come back. We'll take a look at the Logic 247 alerts, the concierge trade alerts, and at any point during the broadcast, if you have a question about anything, simply type it into the question box and we'll be happy to answer the question for you. And don't be shy. Nobody sees what you type except myself, Michael, Valerie, Bert, if he happens to be here. And certainly no one is here to judge you, but to help you understand better what it is we do, how we do it, what it means to be a CFRN passport holder. The passport is a lifetime. It never expires. There's no upsells. There's no additional charges, not weekly, monthly, yearly. It truly is lifetime. One money, one payment. And it includes everything you see on my screen. You get your passport at eminifuturestrading.com. If you have questions, you can call Valerie at 949-42-EMINI, or you can email support@cfrn.net. I don't hear Michael yet. So, that's the sound of Michael getting ready to come on.
It's the sound of Michael getting ready. That is me.
Here it is, the sound of Michael.
Okay, here.
We could turn that into a syrupy song.
Yeah, musical.
To hear the sounds of Michael. Okay. All right, buddy. I can see your charts. The screen's yours, and I'll hit mute, and I'll be here when you're done.
Great. Here we go. Good afternoon, everyone. Today is the 8th day of March, 2022. If you have not taken a free trial with us and you want to take a free trial with us, go here to eminitrainingschool.com. On this page, all we ask for is your first name, your email, and your phone number. You can tell us the biggest trading challenge, so we can tailor one-on-one training just for you. Hit the send button and you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click that link, we don't know that you took the free trial, so make sure you click on that link. All right. All right, spreadsheet. Where'd my spreadsheet go? Do I not have it open? Okay, let me open up the spreadsheet. I had it open. I must have closed it for some reason. We got a lot to go over in the spreadsheet. We had our best day pretty much ever today. And I will, here, that spreadsheet is opening up. And I'll be happy to share that with you in just a minute here. here we go. Oh, that was a little bit. It's last year. Here we go. This is this month right now. Coming up. That was last month, right? That was 2021. All right, so 2021, March was our best year and our best month in 2021. We were at 21,000 in March in 2021. It looks like if this month keeps going the way it is going right now, then this is going to be our best month of this year, probably. January, February, March last year were the best months of the year. And so far this year, they're doing pretty well. Now, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today, as I said, is the 8th day of March 2022. Today we made 180 ticks in crude, 153 ticks in gold, and we ended with just 88 on the ES. I wanted to get the ES over 100, but I ran out of time. So that put us at $4,430 per contract on the morning session. That is over today took 5 minutes and one trade to get to the goal for the day. That brought up $100 a contract, and we took a total of 48 trades this morning. That's more trades than we've ever done in the room in the morning, and that's more money than we've ever made in the room in the morning. So on the month, we're now at $12,840 a contract. That's over 6 trading days, averaging $2,140 per day per contract, per 2-hour trading day per contract. We've now gone 107 days in a row, getting our goal. And we have gotten our goal every day so far this year, 45 out of 45 days. And that puts us at $48,603 on the year, averaging $1,080 per contract per 2-hour trading day. So if you were to quit when you got your goal for the day, you would have worked so far this year only 7.5 hours, and you would have averaged $1,324 per hour. Okay, $1,324 per hour. So let's get into it all. I don't know what happened to my crude oil here. It looks like it's all bunched up down there at the bottom. Oh, hang on, let me see if I can set the properties on something to auto zoom this off on that. All right, here, let me try it this way. Oh, that's what happened. Some crazy tick happened in there during the break. You see this? You'll see it right here. Hang on. All right, I know what to do. So that you can see all this. If I take this and set this auto zoom off, that should have done it. Okay, there's auto zoom somewhere else that's causing a problem. Properties, that one is off. That one is off. I'll get to it here in just a second, guys. That one is off. There was a bad tick somewhere that caused this thing to get all jammed up like this. I'm pretty sure if I just take this off. Nope, that didn't fix it. I thought that was going to fix it. Oh, well, that saddens me. Okay, let's see if we can go to a point where we can see everything. Because we had a boatload of trades this morning. Here we go. All right. Now let me put the CFCFRN back on. Okay. So we'll start out with crude oil then, I guess. It looks like crude oil is where we got our goal for the day to begin with anyway. Okay, so that's all good. Our first trade on crude was right in here. We picked up 10 ticks. Now, there were so many trades today, guys, that I'm just going to go over the trades that we did do, okay? So our first trade was there. We picked up 10 ticks. Then the next trade we stopped out on. So we went from 10 down to 2. Then the next trade, there were a whole bunch of trades in here that were happening again and again. You know, highest probability trades again and again. But everything was moving around so fast that I wasn't able to get on every single trade. And you can see it took a little while here before we jumped on crude again. That's because everything else was moving so fast. I can't believe it went this long. Okay, then we had, it looks like we had a couple of ticks there. We went to 4. Or, no, okay. We had, looks like we had a break even there. And then we had a huge trade right here that was 35 ticks, I think. It went to 47. Okay, and then we had a break even and another break even, it looks like. And then a 20 tick trade that put us at 67. Then a 4 tick trade that put us at 71. Then a 10 tick trade somewhere. Now there were a whole bunch of trades that were happening all through here. But is anybody that was there this morning could see there was a lot going on. Hey, Casey. So we went from 71 to 81 somewhere. There's a 10 tick trade in here that's coming up. And then we went from 81 to 98. And I'm still scrolling. I'm looking for the next trade. I think I had taken some time in here to go through the trade setups at one point, right at 10 o'clock, like 10 to 10:15. All right, so this was a 10 tick trade from 71 to 81, and then we went from here from 81 to 98 right there, and then we went from 98 to 108. We had a break even there. Then we went from 98 to 108 right there. Then we went from 108 to 118 right there, and 118 to 143 somewhere on the next one. See, there were a bunch of trades right through here. Now the spread in crude is only about a tick today most of the time. That's why I was trading it. There it is, 118 to 143 right there. And then went from 143 right here to 151. So we had an 8 tick trade there. Then we went from 151 to 161. So we had a 10 tick trade coming up here. You can see there were more trades in here all through here. Some of them highest probability trades. Here we had an 8 tick trade, then we had a 10 tick trade to get us to 161. Then we had a stop out, hit a break even there, and we had a stop out right here that brought us back down to 153. Then we had a 17 tick trade that brought us to 180. Right in here, I had taken a break for a few minutes, but you can see that there were just some more trades triggering all through here. And the next trade that I took, I think it was my last trade or next to last trade on crude, is when I got those 17 ticks. And there were some really nice looking trades right through here. Highest probability, second highest probability trades, second highest probability, not the highest probability. There was a highest probability trade right here. Second highest probability a couple times through there. And I had a break even there. And this must be the 17 tick trade. This is where I ended it right here. And we're at 180 at that point on crude. Now during the break, it looks like there was, I'm only gonna look for highest probability trades. One highest probability trade right there. One highest probability trade right there. One highest probability trade right there. Yeah, one highest probability trade right there. Yeah, that would have been okay. Wow, and we're not even through that half an hour in the break yet. You see how crazy it was? There was another highest probability trade right there. And I just saw another one. Nope, that wasn't one in there. It was close, but not quite. Close right there, but not quite. was one right here. Nope, that wasn't it either. The slingshot wasn't right. There was one right here. That would have stopped you out. So that's the first highest probability trade that would have stopped you out so far that I'm looking at during the break. And I had said to everybody at the end of the session that there should be pretty active trading during the break. I just didn't do it. Wow, look at all this right here. None of those were the highest probability. You had the second highest probability here and here and here. Actually, not there. Here. Highest probability right there. Sorry, that's enough. You guys have seen enough. There was a ton of trading today on crude oil if you wanted to do it. All right, we'll go to gold now because we had a ton of trades on gold. I mean, I could sit here and go through all these trades for a long time. At one point this morning, so I could go through the actual trade setups, I actually I logged off of DT Pro so it wasn't bouncing all over the place while I was going through the trade setups. I think that was probably helpful to those who were watching. Now, my first trade in gold, I believe, was this one right here. It was. Picked up 13 ticks on the first trade, 10 ticks on the second trade to put us at 23. Then 17 ticks on the next trade to put us at 40 right there. 17 ticks on that trade to put us at 40. Then 10 ticks. That was a break even. But you can see there were a couple of trades right through here. There was one there. A break even there. There was a trade in here that I missed. There's 10 ticks right there to put us. That put us at 50. The next trade, there was a trade through here, a trade here, a trade here. All through here, there were more trades there. I think this is when I had shut it off so I could go through the trade setups. But you can see that there were many trades that happened that triggered all through here. The slingshot was all messed up down here though, so you couldn't have done anything in this span right here. Okay, it was still messed up in here because the BBC, the black step lines below the BBC all the way through here, all this bullish separation. It's just like a reset. It turned around, started going in the opposite direction, but it didn't really want to. It was just a retracement. Then it started going short again. There was a trade there, highest probability there. Some more shorts right through here. Then it turned around, make another attempt at the long side. It didn't do it. Made another short right through there. Now at this point, I believe we are at 63 ticks. And hang on, let me scroll to where we actually did start taking trades again, or where I was obviously looking at it again. There was a short in there, here, and here were more shorts. Here was a small gain. It looks like we went from 63 to 64. I think that was one tick right there. And then the next trade, we went from 64 to 70. So there was 6 ticks there. Then we stopped out, went back down to 62. Then I missed a trade. Then we had a 20 tick trade there, got us up to 82. Then a 5 tick trade to 87. Then a 10 tick trade to 97. Then a 30 tick trade will be coming up. Nope, a stop out. And we went from 97. Okay, there's a 30 tick trade that's missing somewhere. And then we went from 97 to 127. And then we went from 127 down to 19. This is the stop out right here. Okay, and it went from 119 to 124. So we had a 5 tick trade. Then we had 2 stop outs in a row. So we went from 124 to 116, then 116 down to 108. Right there. And here we went from 108 to 118. It was a 10 tick trade. From 118 to 128. Right there, another 10 tick trade. And then there were some more trades in here that I didn't get. One there and one there that I didn't get. Turn around, gave short trades in here. There was one there that I didn't get. There was one here I didn't get. And what time is it now? 10:46. Okay, we're at 128 at that point. Then we had a 26 tick trade, it looks like. The next one that we did. We had a break even. This is the 26 tick trade, got us to 154. Then we had a 7 tick trade. A 7 tick trade somewhere in here to get us to 161. There were some trades in here that I was missing on the gold. Okay, there and there and there and there and here. And we keep going sideways. There was another one here, 7-tick trade right there. That goes to 161, and then we stopped out. It got back down to 153, and that was where we ended the morning session. Okay. Now we're back to the break. Highest probability trades only. There was one right there, one right there. One right here. Hang on. I'm looking for them. One right here. Oops, I thought I saw one up there. Anyway, let me scroll over slowly because we're getting pretty close to now. There's one right there, highest probability. One right here. This looks like one. Yeah, right here was the short. Highest probability that if it didn't stop you out, it was really close to stopping you out. Right here, highest probability long. Okay, and that was it. And that was it for the gold. So we ended with 153 ticks on gold. Right, our last trade. Our last trade there was a stop out. And the ES now. The ES was pretty active too. At one point, the ES was the most active. And I thought for a little while there, the ES was going to be our market of the day, but then things just changed. And everything else started getting really crazy. So with the ES, our first trade was right in here, I believe. Hang on. Scroll back. First trade took 5 minutes. Yeah. Go all the way back here. Okay, so our very first trade on the ES was right here. Okay, and our first trade, we picked up 11 ticks. The second trade, we picked up 16 ticks. So we're at plus 27 at that point. Then the trade after that, we had gotten 4 ticks. I think that was the second trade. Then there were some more trades through here, but I think we picked up 4 ticks to get us to 31. Then we had another 16 ticks to get us to 47. Then we had 9 ticks to get us to 56 right there. And then 10 ticks somewhere to get us to, here we go, 10 ticks to get us to 66. Then 8 ticks to get us to 74. Hold on, scrolling. There was a lot of activity today. Hold on a second. Okay. We got into the weekly trading zone. We got away from the zone. We went back to the zone, hovered around the zone. Okay, there were a lot of trades in there that I didn't show, but the next trade that we did do was 8 ticks on the ES. Right there, we picked up 8 ticks to get us to 74. Next one after that was 12 ticks to get us to 86. I was thinking, it was getting toward the end of the session, and I was saying I need like another 24 ticks or 26 ticks to get to the goal for the day. I didn't think I was going to get it. Then I had that 12 tick trade right there that got us to 86, and a 2 tick to get us to 84. I mean to 88. That's where we ended it right there at 88 because it got really choppy right at the end. right at the end of the session this morning. It got really choppy, and I decided I wasn't going to try to push it anymore. So, just highest probability trades during the break. There was one right here. One right here. This one didn't go anywhere. Does anybody have any questions about any of this? No, probably boring. It's got so many trades, and it's all the same thing over and over and over again. But there was so much opportunity today. I'll just end it with that. There was just a ton of opportunity today, and if you get in there today, you definitely should have pulled something out of the markets, because it certainly did give it up. All right, so if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today's the 8th day of March 2022. Today I made 180 ticks in crude, 153 in gold, and 88 on the ES. Put us at plus $4,430 a contract. Today it took 5 minutes and one trade to get to the goal for the day. At that point, we're $100 a contract, and we took a total of 48 trades this morning. That is a new high on the day, on the morning session, and that is a new high on the morning session. On the month now, we're only 6 days in, and we're at $12,840 a contract, averaging $2,140 per contract for 2-hour trading day. Our last negative day was 107 days ago, and we've got our goal in 45 out of 45 days so far this year. There was one thing I wanted to point out to you guys that we normally do. I'll show it in just a minute. On the year now, we're at $48,603. It's over 45 days, averaging $1,080 per contract per 2-hour trading day. If you were to quit and add 1 contract per month, quit when you got your goal for the day, you would have worked 7.5 hours so far this year and averaged $1,324 per hour. If you haven't taken a free trial with us and you want to, go to eminitrainingschool.com. And on this page, all we ask for is your first name, your email, and your phone number. You can tell us your biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button, you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click that link, look, bad tick right there. If you don't click that link, we don't know that you took the free trial. Okay, so back here, what I wanted to show you was this. Now, this morning, I had said we're at the lowest weekly trading zone on a Tuesday, and usually if you're at the lowest weekly trading zone on a Monday or a Tuesday, by the end of the week, you're going to be at the highest weekly trading zone. So typically what I would do on a Tuesday like this one is I would look at call options, and I would give you guys some of the better priced call options to buy, 1 week call options. I was a little hesitant to do it this morning. What I was looking at here on the 30-minute this morning, when price was in here. Now, it looked a lot different when it was up in here. It looked a lot different this morning when price was in here and you had a wick below and you had the white candle working on the inside in between the MA1 and the BBC. As this candle was building, I said, okay, at the end of the hour, if this candle closes above the MA1, that's going to be really bullish. If it closes below the BBC, that's going to be really bearish. And if it stays in the middle, that's going to be bad because it's not going to give us a lot of range to trade in. Well, it closed below and then it tanked all the way down here to the weekly trading zone. And I was expecting it to go down to the low down here. It didn't make it all the way down to the low. And then I was looking for a pullback spot. And that's when I drew in this thing right here. Now I drew that in while this candle, I think it was this candle, maybe this candle was being created. I drew that in. I said in the next hour or two, we're probably going to see it pull up to this level right here. Well, it pulled up to that level and went right through that level. Now, this is pretty bullish action right here. I don't know how much longer it's going to last. You got to look at it in the bigger picture of things, because we've had so much volatility.
It'll last until the ether wears off.
Yeah, there you go. Yeah, because
everybody's giddy. Everybody's giddy right now with the Russian oil embargo, but there are so many other factors at work here.
That's what I was saying this morning. I don't know if Dwayne's actually said it out loud, but this is not rational trading.
I haven't, but I agree.
And so all the normal things that we would do, like looking for the call options when we're at the lowest weekly trading zone the first day or two of the month, that does not necessarily apply this week. It would have applied if we'd have done it this morning when it was crashing down to here. It would have applied, but that doesn't really mean a thing. It doesn't really mean a thing. You know what would keep this going up right now? It's if he opened up the pipelines. That's what would keep it going up.
And you know what? He did not mention the pipeline once. And I think I heard the whole speech. Did you? You were
No, I
busy,
didn't
so
even know
you
there
were
was a speech.
you were. Oh yeah, yeah. This morning he spoke. It was televised, and he announced the oil embargo, the Russian oil embargo, and that's what
Well,
turned the markets around. Prior to him speaking, we were on track for the worst session since October of 2020, according to a headline I read. I
interesting.
didn't personally vet it. But once he officially announced, so there's this burst of euphoria. And if it were just an ordinary kind of a week, then what Michael just said, we would absolutely expect price to end at the other end of the spectrum by the end of the week. In other words, at the highest weekly zone. But
Yeah.
there's
This is not rational thinking at all.
yeah.
And there's so many outside factors affecting the markets right now. Normally I would play the SPY options on the upcoming FOMC that we're going to be getting here in the next week or two. And I'm not even sure, because there's going to be so much money built into the volatility in the markets that it's going to be hard to make money. You got to play both sides of it, and because you got to pay so much for the volatility factor, playing both sides isn't going to work out as well, because this is irrational. It's not irrational exuberance. This morning right here was irrational fear, and this right here is irrational exuberance. So I really, I want to get involved at the level that I'm involved at. I don't really want to go
And
doing all the things that have worked.
I'll point it out when I take the charts later, but if price keeps going up towards this next weekly trading zone, right before you get to it, if you look left, there is a bearish cross. Right
there.
Right. Yeah, so that's just kind of an area. So two major reasons. It can act like a magnet and draw price up, but then there's a very high probability of it being rejected at that point.
Yeah. What it would do, and this is, given what Dwayne just said and the fact that we have a weekly trading zone right there, I would anticipate price would get up to here, and then
Splat.
Yeah, the Splat should go down to right here. Okay, this is probably going to happen over the next day. Price will get up to this point right here, and probably today this will probably happen. It'll get up to this point, and then at some point work its way back down to this point. That is what I would expect to happen. Just given the normal way that the markets work and the way that we've been doing things over the years. Now, if we would have bought the lowest weekly trading zone, like we've done in the past, by the calls at the lowest weekly trading zone, that would have worked out just fine, not knowing that there was something that was going to push the market up right here. But I chose not to do that, not to even look at it, because it, obviously would have tempted me, because over the years, in that 1 week span, we gained usually 30 to 300% on those options. But I just didn't want to do it today, because I know with the volatility that we have, we're going to be paying a huge premium for the volatility. And the amount that you're going to pay in time is going to be exacerbated by the volatility.
I suspect today's volatility, crude already went to what, 125% margin?
Yeah, crude's at 125. Grains are at 200.
At 200%, and I suspect today's move in gold and silver may affect those margins as well.
Yeah, and I'd be surprised if they don't bump everything up to at least 100%. With the volatility that we've had, I'm surprised they're keeping the indexes as low as they have them right now. I'm knocking on wood, but we'll see how it works out.
Knock on wood, because
All right. Well, with all that, I can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Okay, if you are ready to take it, Dwayne, I'll leave this stuff on here and we can discuss it tomorrow. right,
Okay.
we'll see what happens at this point tomorrow.
All right. Okay, recap of the recap.
Today, it took 5 minutes and one trade to get to $100 a contract.
Good job.
Thank you.
Good job. Let's see where I want to start. I guess we'll start here real quick. There's not a whole lot to talk about, but we'll talk about it because we've had a moratorium on logic alerts for a few days now because of this extreme volatility. Our goal is to help new traders learn how to trade, not blow up their account. And when you've got the exchanges, raising margins to 100%, 125%, and 200%, I mean, that's their way of telling you, hey, you might want to stay away from this. In fact, it's their way of trying to keep you away from it, without actually, halting trading or something, which happened in nickel today, of all things. And I haven't had a chance to look that up yet. I read that earlier. What did it say about nickel? I think that page has refreshed, so it's not showing anymore. Yeah. Oh, yeah. Nickel price doubled to $100,000 a ton. London suspended trading in nickel. And I'm not sure what nickel is used for. Well, I think they used to use it to make nickels, but I don't think they do that anymore. So anyway, all right. So far this week, today's Tuesday, all we've issued is 5 alerts in Logic 247. Still waiting on the outcome of 1. We've had 4 actionable alerts, of which nothing has been stopped out so far, based on not risking more than $300 per contract per trade, less when possible, using market structure and a simple 3-step process that we teach all of our traders. Now, the logic alerts are based on current price action, and they come out around the clock, 24/7. We have traders around the world. Our day session is their night session and vice versa. And so the criteria is when there is a logical opportunity. That's when I post, under normal conditions on typical days, that's when I post the Logic 247 alert. And I happened to see a few of those last night that looked doable. And in fact, they did work out okay. Now, we have 2 types of alerts. The logic alerts based on current price action that come out around the clock. But we have our original alert service, the concierge trade alerts. And those are different because they're based on historic price action. And they don't come out around the clock. They are posted as a static report shortly after the Globex open each evening. Usually it's sometime between 6 and 6:30, or 6:15 and 6:30. That's typical time. I've been dragging my feet here of late, only to see, as the new session opens, is there going to be any unusual bullish strength or bearish? Just trying to get bearings a little bit. There's 2 numbers for each market, and the best way to handle this, of course, is once posted, whatever markets you trade, chances are you don't trade all of these markets, but for the markets that you trade, when this report is published each evening, go see where price is on the market you do trade. Because from that point forward, if price starts trending up towards 42.95, that's bullish, and our strategy will look for opportunities to be long the market. If price starts trending down towards 41.70, that's bearish. And our strategy will look for opportunities to be short the market. And in both cases, that's where you'll use Logic 247 under normal conditions. And of course, everything you learn in the live training room each day. This is where you get to put to work everything that you learn. Okay? Now, Michael teaches you the mechanical model, which embodies the underlying principles upon which markets operate. The logic alerts, concierge alerts, embrace discretionary trading built upon that mechanical model. So while what he does and what the CTAs and the logic alerts do may look different because there's different time frames, different amounts of risk, different size targets, under the hood, it's the same underlying principle. Okay, so if anybody wants to grab a screenshot, now's a good time to do it. And then we'll go look at a daily chart. Okay, so let's, guys, this Ukraine now, I've talked about it a couple times. In Telegram, if you just type in Ukraine now and click the English, you can join the channel. They put out a lot, so you can mute the channel and then just go check it at your leisure, so it's not like blowing up your phone. And that goes for any Telegram channel. You can mute it, unmute it. If you put it on mute, it still continues to accumulate the posts and the articles. It just doesn't make your phone ring or vibrate or however you have it set up. Okay. Daily chart. What a turnaround story. But don't get too caught up because we got a lot overhead. So last night, I put a post in the Telegram discussion group that we had reached the top of the window. Okay, this last window, this is the all-time historic high put in on January 4th, and this is the most significant low put in on February 24th. Okay, and I was asked, how do you think the market will handle what you've just posted in the channel? And I said, I think we'll probably go down about halfway through the window, and then we'll go back to the top of the window, and then we'll continue to the bottom of the window. And as you can see, the bottom of the window is above this swing low, because buyers who bought here at this price, they had a nice run to the upside. Okay, so as price approached that area, institutional buyers would potentially come in early so they don't get left behind. However, there was no way for me to know last night that there would be the speech that was made today. Let me refresh this just to make sure we got an accurate reading. Okay, so we made it more than halfway through the window. The top of the window was, I don't know, about 41.95, I guess. And the low of the session was 41.3875, so we'll call it 41.40. So we had about a 50-point move to the downside, and things were looking pretty bleak until the embargo was announced, and it's pushed us almost all the way up to the 24% fib retracement. Just above the 24% fib, we have the daily red and falling. Okay, so we got potential resistance here at 42.67. Now these are reverse fibs. In a downtrend, you draw from the high to the low. Whereas in an uptrend, you draw from the low to the high. So as we approach the 24% reverse fib, that's the first spot that we would expect there to be some good resistance. This is a daily chart. Institutional traders watch the daily chart much the same as we watch 30-minute charts and 5-minute charts and tick charts and range charts. So the deep pockets know we're approaching a fib on a daily chart. So there will be institutional traders positioned here, ready to sell at the very first sign of weakness. Some of them may buy their tickets early, and that could prevent us from getting all the way to the 24% fib. The ether, the irrational exuberance, it'll wear off, and then we'll see, what happens from there. Just know to expect potential resistance at 42.67, the 24% fib, and then 42.89 looks like where red and falling is. So if we get through the fib, resistance there, and then this window we drew on the show, I don't know if it was yesterday or no, I guess a couple days ago. Anyway, after the 24% reverse fibs, the 38. 1, 2, 3, 4, 5, 6 sessions, 6 trading days. We tried to break through that 38% reverse fib. This day looked the most promising, but it's not as much what happens during the session, but how the session closes. And the session closed that day after poking above the daily BVC and this trend line. We closed just below that 38% reverse fib. Now on this day we closed above it barely, then right at it, then right at it, and then right at it, and then below it, and then that took us down to the low we've seen in this session, and now we're catching a really nice bounce. Okay, but be careful, be cautious, keep an eye on your weekly trading zones so that you know where that resistance may be. Okay, this is the high altitude look. And for those of you that are new and you go, well, I don't understand why I even look at this, because I don't trade a daily chart. I trade a 4-tick range, or I trade a 610 tick, or a 1597, or a 5-minute. It's so that you understand it's the institutional money that moves the markets. Us retail traders, and by retail, I'm not just talking about the guy trading one contract. I'm talking about the guy that trades 10 contracts or even 20 contracts. That's still on the retail side. I'm talking about institutional traders who may put on 100 contracts. Okay, those really set the tone for the market. And so by looking at the daily chart, you have an idea of what the big money sees. Fibs are universal. We certainly didn't invent them. They're based on 14th century math. Now, don't go out and buy expensive fib software, because you have a free Fibonacci retracement tool on your platform, whatever platform you're using. And most platforms also have the Fibonacci price extension. So there's no reason to spend 20 grand to have some software draw lines that you can draw yourself once you understand the important places. I mean, this is the all-time historic high, and this is the most recent significant low. So it's very easy on this chart to know where to draw your fibs from the high to the low. Okay. Now, as we approach the 24, 42.67, we've got a weekly zone at 64.65, okay, just ahead of that reverse fib. And that weekly trading zone is not there because of this fib. It's two entirely different methodologies, ways of thinking, principles, etc. It's when we see these things come together that it makes it even more important. So we just inched up a little bit higher. See, market's still buoyant. It's kind of like at the moment trying to hold a beach ball underwater. You know, you can hold that beach ball underwater for a long time, but the second you let go, up she goes. Okay. So you know where resistance is. Support, of course, is at the low of the day. An important support would be, see, the low of yesterday's candle and where we opened last night. That's an important area right there. We opened the session at 41.86 and a half, and yesterday we closed the session I guess it's not going to give me my reading because I can't get to the top of it. Well, we'll see it on a smaller time frame. But we basically opened today's session where we closed yesterday's session. So that area 41, what did I say? We opened at 41.86 half. That's an important price, important area. And then, of course, the low of the session, then the bottom of the window, and then this previous swing low. So where does the market find resistance? Because price flows the same across all markets and all time frames. Whether it's a daily chart of the S&P, or a 1-minute chart of crude, or Apple stock, or some Forex pair, or crypto, price flows from support to resistance, back to support, back to resistance, over and over again and again. Learning to use multiple time frames is extremely important. The larger the time frame, the more important the information it conveys. So that's why we always start this show out, or this part of the show, looking at the daily chart. Because we want to see what the deep pockets are looking at so that we can understand what their next logical move may be. Now, as Michael mentioned, this is irrational, which is the opposite of logical. But logic ultimately will prevail. We just hit that 24% fib. Okay, at 42.67, which puts us just above our weekly zone on the yes. Right there. So, yesterday, I still had last week's weekly trading zones on the chart because any alerts that go out on Sunday night are based on the previous week's zones, because the weekly trading zones are issued to our traders Monday morning, 6:15 a.m. Eastern. We've published the zones every week since December 14th of 2009. So we have well over a decade of data on how price behaves around a weekly trading zone. Now, Michael mentioned that we had hit the lowest weekly trading zone. I thought he may not have updated his zones yet, because this week, the lowest weekly trading zone is 41.25/26. Michael, I don't know if you're still listening, but check your zones. Okay. This week, the lowest weekly zone is at 41.25/41.26. The CTA on the short side was 41.70. And so we triggered it, and it took us down to a low of 41.3875. So we'll call it 41.40 to be conservative. That's a 30-point, 30-minute candle. 30 points. Okay. Not typical. We get back above the trigger, we trigger again. And then we go up to the zone where we find resistance, which is what we expect. When price rallies up to a zone, we expect resistance. When it drops to a zone, we expect support. Yesterday afternoon, we had support for, these are 30-minute candles. So 1, 2, 3, 4, 5, 2.5 hours. Then we finally broke through that support. And then we closed the session here, or actually here. This was the opening candle of the Tuesday session, which is what we're in now. But the Tuesday session began last night at 6 p.m. Eastern. We'll get these out of the way since we don't need them right now. Okay. So the market opens, we make a run at the BBC, which we expect to be resistance. There was such selling pressure, we weren't able to actually reach up and touch the BBC. Down we came, now blue and climbing. Once price closed below blue and climbing, and then open and closed below blue and climbing, and then price, red candle, takes out these two lows right here. I mean, you could have easily had your goal for the day before we even got to the short CTA. Something like 41.85 down to 41.70. It'd be 15 points before you got to the trigger. Okay. So the market found support here. Why did it find support there? You see that bullish cross right there? When a bullish cross leads to an extended move, the first time price revisits that area, we expect it to be good support. And it was. I know I tell you this every day, but we have new people every day. So it's very important that you understand that. I mean, this thing literally turned on a dime where the last bullish cross took place. So it's not a mystery that the market found support there. There's a logical reason. A bearish cross that leads to an extended move. The first time price revisits that area, we expect resistance. Now, is this 100% guaranteed? No. There are very few absolutes in the market. However, it happens more often than it doesn't. So if the market were to run out of steam right here, we could certainly understand why. Because there's irrational exuberance, things may not behave as logically as we would anticipate. But to see this thing lose steam like it's doing, see that? See it just drop? Okay. So it's fighting its way through here. It might make it through. It might take another candle. Overhead we have the CTA 42.95 on the long side. So there's two-sided action. We triggered and we triggered. Now we're at a point. If we can overcome this area of potential resistance, the next spot you would expect there to be potential resistance would be about 42.90, which is the high of this candle. If we overcome 42.90, Then we got our trigger at 42.95. And on every alert, on a short alert, the final trade to target is the zone below. On every long alert, the final trade to target is the zone above. Price is always trying to get to a zone. Does it always get there? No. But is it always trying? Yes. And how do you know? Which zone is it trying to get to? Well, if price is above the BBC, it's trying to get to the zone overhead, like here. But once price gets below the BBC, it's trying to get to the zone below. And once that zone gets taken out, then it's trying to get to the zone below that, which would be this week's lowest weekly trading zone, which we didn't quite make it to for the reason I just showed and explained to you. Okay, see, we're still struggling to get through this area. If we get through it, don't forget this resistance at 42.90, and then from 42.95 we should have some pretty clear sailing up to at least 43.18. Okay, we'll come back and look at this in a minute. All right, on to the Dow. $32,625, and we're just approaching, or we just triggered the long side. Okay, now here's where we open, ran up to the BBC, which we expect to be resistance, and it was. Sent us down to blue and climbing. Selling pressure was so great we were able to get through blue and climbing, which when that happens becomes red and falling. So by the time we triggered, it took us down to 32,305. It's basically 300 points, $5 a point, $1,500 per contract traded. And then here's the London Open. Boom. It takes us right to the zone. Remember, price is always trying to get to a zone. Didn't make it to the zone below. If we go look back over here, we'd find that same bullish cross we saw in the ES. We hit the zone. We spike it. Look over here. See where price was rejected, rejected, rejected. This was a big green candle. But when it got up to this area where the market previously rejected price, it rejected price. Very logical. And so price comes back to the BBC, consolidates, blue and climbing, turns to red and falling, and then we get another drop and we get another trigger, which takes us down to 539. And then this candle closes here, opens here. So we didn't really get a trigger here. The next real, well, we got this little trigger here from 625. It's about not quite $100 per contract. And then this candle opens here, heads down to 541, 625, 625 minus 541, 625 minus 541, 84 points, $5 a point, $420 per contract traded. Once an alert triggers, there's a greater probability of it triggering multiple times than not triggering multiple times. Okay. So we've spiked the trigger the first time. We got a high from 45 up to 74. It's almost 30 points, almost $150 per contract traded. The market is still bullish. It's still trying to move higher. Okay. Let's go to the Russell. Here's where we opened. We opened here. Pulled up to the VBC. First we have some resistance at the zone, then we pull up to the VBC, which we expect to be resistance until proven otherwise, which sends us back down for more consolidation at the zone. Only three things happen at a zone. Once we get through the zone, get below blue and climbing, it turns blue and climbing to red and falling, and then we have this very nice trigger here. This first trigger took us down from 41 to 38, so it's about $150 per contract traded. Then we get back above the trigger, and we drop to almost 20 points at $50 a point. It's almost $1,000 per contract traded in one 30-minute candle. And then on the long side, from 1980, the trade to target was 2007. So that's $2,700. No, it's not. I'm thinking gold. What do we got? 27. Yeah. 27 times 50. $1,350 per contract traded from the published entry to the published target. Remember, on a long, the final trade to target is always the zone above. Does it always make it to the final target? No. But we had resistance here. This was, today's Tuesday, this was Monday. So we had resistance here yesterday. We got resistance again here today. Okay. Market seems to be cooling just a little bit. We had our short triggers. Right to the zone. So if you were long this move up, okay, not only because there's a zone, but because there's previous resistance, you need to be thinking about taking profit while you're at the zone. Now, could we be backing up to make another run at the zone? Absolutely. Yesterday we ran up, we came down, this candle opened, we ran right back up to the zone again. On three separate 30-minute candles, we hit the zone, and then buyers threw in the towel and decided to step back and just wait for better prices. This bearish cross right here was the high of that candle. This candle opened green up to it hit the area of the bearish cross and then dropped all the way through this zone and found support at this zone. Okay. You've got to be on the lookout for this. Okay, on your 30-minute chart. Not that it doesn't apply on other time frames, but the roadmap for all of the alerts is the 30-minute chart. When I'm deciding to go long or short on a 1597 tick or a 610 tick or even a 5-minute chart, okay, it's based upon what, first, the daily chart, and then the 30-minute chart is telling me that deeper pockets are up to. And so, would I short this? Not yet. Because on the 30-minute chart, we're way above the BBC. So what I would be looking for is opportunities to be long the market. Let me show you an example. Let's make this a Russell chart. Okay. Price has pulled back to the BBC. The pullback holds more often than it doesn't. Watch. We do have red and falling overhead, which is important, but not as important as on a 30-minute chart. So this pullback to the BBC was at roughly 2000, and red and falling is up at 2004/2005. Okay, so you know you got some potential resistance here. You know you got some potential resistance here. And where was that weekly zone? 2007. Come on now. $2007. I think I got mouse issues. The other night, I found out it was because it had become unplugged, or it was partially plugged. Yeah. And get a new mouse. 2007. Okay. So, now we're going to watch for this to start rising and take out that swing high. Remember, we hit a weekly trading zone. And we expect that to be good resistance until proven otherwise. It's 2007. Yep. There we go. And notice over here as we pulled back, we got below the BBC, and then we're above, and then we're below, then we're above. So it's pretty choppy. Okay, we may not find support until we come back into this area. Or it could be the buyers have said enough. Maybe the ether has worn off. Okay. Red and falling, driving us down. We're almost to a bearish cross here. Now we'll see what happens with this green candle. If we overcome red and falling, we'll have about a 3-point window of opportunity back up to the zone. These pullbacks, even they overshot a little bit, they ultimately held. Will this one? Only time will tell. Let's go through the rest of the markets, then come back and take a look. Now you can do this too, okay? So the 1597, where we last bounced, we had a bullish cross and a leg and a retracement. We have to anticipate support across this area here. If we get below that area, then we've got a pretty nice counter trend window of opportunity. Because don't forget, we're way above the BBC on the 30-minute chart. BBC's way down here below this weekly trading zone. This alert has only triggered one time so far. Once an alert triggers, there's a greater probability of it triggering again. Let's see what happens. But we'll go look at the other markets, otherwise it'll take all day. On the NQ, hit the zone, we're getting the retracement. Bearish cross led to an extended move and became resistance. The first time price reached up to that area. So what's price trying to do now? Well, it looks like it's trying to pull back to the BVC. The CTA short side triggered, but the long side did not. So from 235, the weekly zone below was 189. I'll use my calculator. 235 minus 189. 46 points, $20 a point, $920 per contract traded. That's on this trigger here. And then we did the same thing again. And then we did the same thing again. And you'd have to go to smaller time frame to see it at work, but we basically did the same thing again here. Okay, so we overshot the zone, lots of selling pressure, but ultimately the zone area held, and we overshot this zone, ran into trouble at the bearish cross. We've not triggered the long side. Price is going to not only have to overcome the bearish cross, but it's going to have to overcome this spike high. And that high is 13,666. Okay. Now, see this swing high right here? Okay. Clearing that swing high gives you a window of opportunity at around, wow, to be very generous, 13,720. Potentially 35 points at $20 a point before you even get to the CTA trigger. So we're pulling back. We've covered the S&P. Pulling back. Now, remember how price was struggling to get through that area? And this was, when we looked at this a minute ago, okay, this was a green candle, right? And it looked for all the world like it was going to burst through and make a run at the zone overhead. This is one of the most important lessons I can probably teach you, is to always watch for this on your 30-minute chart. Because there's a lot of people that went long up here. And when their stops get hit here, if they haven't already been hit. Now, at the BBC in blue and climbing, we expect that to be support until proven otherwise. Okay. The Dow, same thing. We're pulling back. Okay. Now, here's an example. Of where the bearish cross did not have as much of a dramatic effect. It will more often than not. As I said, in trading, there's no real absolutes. Except when price rises to a zone, we do expect resistance until proven otherwise. And when price drops to a zone, we expect support until proven otherwise. Okay. All right. The Russell still pulling back. See, it's almost back below the trigger. Blue and climbing's potential support. If it gets through blue and climbing, the BBC is right at the weekly trading zone. So either one of these two areas could become support. Unless if this daily candle goes red, you got to completely forget about any long trades. Well, you don't have to, but the market's sending you a huge signal that this irrational exuberance is the 24% fib that became the resistance. We never got to red and falling. We never got to the step line. We never got to the trend line, the BBC, or the 38%. So far, the 24% fib has been sufficient. Crude oil. Zone to zone to zone. So 122.45. Now this first trigger took us up to 123.12. $700-800 per contract traded. And then we did it again, and again. And red and falling got in the picture. You don't want to go long in the face of red and falling. And then we turn to blue and climbing, and it takes us right up to the target. Now that target is worth about $5,500 per contract traded. From $123 to $128, that's a $5 move. A $1 move is worth $1,000. So a $5 move is worth $5,000. Okay? These are not typical markets. I can't say that enough. Michael said it and said it, and I said it and said it. We had resistance here yesterday and again today at the zone. We managed to get below the zone last night. Enough to trigger the short side at 118.10 down to 117.10. So $1,000. And then we begin this journey up. Leg, retrace, leg, retrace, leg, retrace, back to the zone. Spiked it, but it held, which sent us up to this zone. From zone to zone, that's a $7,000 move. If you got long at the zone and got out at the zone, okay. Now there was no alert telling you to do that. I'm explaining this simply for those who are learning the methodology and the strategy. This is how price, even in the land of the giants, typically works. Price goes from zone to zone, sometimes back to the zone. We were at the zone, went up to the zone, down to the zone, back up to the zone. Okay? And all of our members got the zones Monday morning, yesterday, 6:15 a.m. Eastern. Gold. What a move. Now here's the open last night. We came down, we spiked the zone. We got right to the important price, important area at 86. Price turned on a dime. Got back above the zone. Got back above the BBC. Now, we had resistance, resistance, resistance. It wasn't until this candle that we were able to break the resistance at 2009. And that took us up to 2027. It's about $2,200 per contract traded. Then we get back below the zone, and off we go again. And then we come right back to the trigger. Yeah, you can see that little wick. It's just enough to qualify it technically as a trigger. Okay, and then this pull back to the BBC held. It does more often than it doesn't, even when it spikes it. And so here we are at a zone 2050, which is, I believe, this week's highest weekly trading zone. Now we've exceeded that. Pull back. Now, even when we exceed the highest weekly zone or the lowest weekly zone, by the close of business on Friday, we expect price to be at or below the highest, at or above the lowest. Okay? So today's Tuesday, the week's far from over. We've got to be patient and see how the market handles the rest of the week. But from 2009 to 2076, every $1 move in gold is worth $100. So you can do the math. Silver, a $1 move is worth $5 grand. So from 2604 to 2704, it's a $5,000 per contract move. But what happened when price pulled back to the BBC? See, this was a big red candle. But before the 30 minutes were over, you've got this huge green candle. We opened, we dropped, market found support, and off we go. A huge day for silver. Now, I think it was yesterday we looked at a weekly monthly chart on silver. We know that $30 is a huge line in the sand. We still have weekly zones above on silver, although we've already hit the highest weekly zone on gold. Last is the euro, pulling back to the BBC to potentially give us another leg to the upside. We did not trigger on the short side. We did trigger on the long side. A small trigger and a small trigger. Then we had a trigger that took us right up to the previous resistance. And then we got back below the trigger. Triggered again. So long as you got blue and climbing, there's a valid triggers, valid triggers, valid triggers. This one here, you got red and falling overhead. Well, actually, when it triggers, if you had waited for price to just, on this candle, if you had waited for price to get above red and falling, and then go to your smaller time frame to find a pull back to the BBC, so you could get long and limit your risk, price ran right up to the target, almost to the tick. Remember, on a long alert, logic or concierge, the final trade to target is the weekly zone above. On a short, it's the weekly zone below. So here we have price pulling back to the BBC. We'll see if it holds. and on the daily chart. I don't know what I just did, but I don't think I should have done it. I definitely got to get a new mouse. Okay. So, all that hoorah. Be patient. Let price get below where we opened last night. And that looks to be the direction it's headed. Now, could it find support? Here. Absolutely. Or based upon the bigger picture, could it drop right through it? Yes. That's the truth about trading. Okay, I've taken up enough of your time today. Let's go to our good word for the day, and then we'll call it a day. Now, all right. Yesterday, Dwayne, oh, I'm sorry, I missed your question earlier, Peter. Oh, disregard, figured it out. Can you kindly remind me how to place the numbers on the fibs? The 23, the 38, etc., and price, far left. But you already figured it out. Okay. To those, maybe, you know, that's a good question, though, so let's just do this. Let's say we wanted to draw fibs from. I know you already figured it out, Peter, but that's just for the benefit of other folks that maybe haven't. Okay, you use your fib tool to draw from the low to the high. This shows you where the market may potentially find resistance. Right now, it's bouncing off the 50% fib, not the reverse fib. This is a regular fib because I drew from the bottom to the top, not from the top to the bottom. Now see, we could draw from the high to the low to see where we might find resistance. By drawing from the low to the high, we show where we may find support. And the 50% fib is often a good place to find support. But the way you do that magic is you double click to open up your properties box. At the very bottom, you got a couple options. You can hide the numbers, you can show the current price, you can show the current level, and as I've chosen, you can show the level and the current value. And then once you've got it looking just the way you want it, you can change colors, you can change the line itself, the width of the line, you can do all kinds of things, the size of the text, the font. When you got it all just perfect, click Save as Default before you close, and then every time you draw fibs, that will be your default. Okay. So great question. Sorry I missed it earlier and made you figure it out on your own. Yesterday we talked about where did my notes go? Hang on. Well, whatever we talked about yesterday, today we're going to talk about overcoming rejection. It's tough. 1 John 3:1. Think how much the Father loves us. When you struggle with a sense of rejection, it will manifest itself in things like this. Perfectionism. But it doesn't work because other people's needs and expectations vary so much it's impossible to make everybody happy. Number 2, settling for less. You put up with neglect and abuse because you think it's what you deserve. Or you're concerned this may be your only chance at love. Becoming aggressive. Rejection can feel like you're being attacked when you're not. So you put on your boxing gloves and you come out swinging. Putting up a tough front. You tell yourself, I can handle it. Who needs other people anyway? As a result, you shut yourself off from others. Your physical, spiritual, and emotional needs go unmet and you feel lonely. Vowing never again to let anyone get close enough to hurt you. That might sound good in theory, but by closing people out, you close yourself in, and all your relationships suffer. Number 6, attracting the wrong people. As long as you behave with a diminished sense of self-worth, you will keep attracting the wrong people. The truth is, when your self-worth is based on any opinion other than God's, you will always be vulnerable to rejection. Criticism will diminish you. Failing will keep you from trying again. And what's worse, you will never discover the unique and wonderful person God made you to be. So what's the answer? How do we handle rejection? John tells us in 1 John 3:1, think how much the Father loves us. He loves us so much that He lets us be called His children, as we truly are. Overcoming rejection starts with understanding and accepting how much God loves and values us. Yes, even me, and yes, even you. We are His children. And He cares for us greatly. Don't ever forget that. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.